Okay, question 4 is a question called, it's an IAS 36. I'll just deal with that, IAS 36. It's from June 2012, and the start time is 16:10. It's a 15-mark question, so 15 marks times 2 is 30. Take off 10% is 27 minutes. 16:37 then finish time. Right, part A. This is a written question, written answers, not a computational. And that means I should have spent time during my initial 15 minutes reading time planning what I was going to say for this 4 marks. 4 marks planning time is 2 minutes. I have therefore 2 minutes to think of 4 things to say, explaining what is meant by an impairment review. My answer should include reference to assets that may form a cash generating unit. I am not required to describe indicators of an impairment or how impairment losses are allocated against assets. Oh, okay, alright. An impairment review. Assets, this is only planning. Assets should not be stated at an amount greater than the lower of carrying value compared with the higher, well, recoverable, compared with recoverable amount. Recoverable amount is the higher of value in use compared with net selling price. Value in use, explain, it's the present value of the net cash flows attributable to that asset. Net selling price is the net price, net for which the asset can be sold today. Only rarely can the cash flows that we need to calculate value in use be attributable to an individual asset. So I'm going to give an example there. It doesn't preclude me, the question doesn't prevent me. So, dispensing machines, a coffee machine or a sweet machine. Dispensing machines are examples. The only other one I've ever thought of is investment property. This is individual properties which will generate cash flows of their own without reference to any other asset or group of assets. So it's only rarely can this happen. So instead we'll allocate assets to a CGU, a cash generating unit, and I'll need to explain what that is. That's the lowest grouping or aggregation of assets which generates cash without reference to any other asset or group of assets. So that's what impairment review is. Some assets must be reviewed annually by directors. Yeah, clearly the obvious one is goodwill. Now I think that that's likely. That's not good. That's, what time is it now? It's 16:15. I've already spent 5 minutes on this. I should have only spent 2. It's 4 marks. 4 marks in total. 4 times 2 is 8. Take off 0.8, 7.2 minutes. Actually, my plan is almost wordy enough to be a proper answer, but I'm not escaping the fact that I've spent rather longer on that. Don't forget, though, that I did have 2 minutes worth of planning time within the 15 minutes reading time at the start of the exam. Okay, I'm into part B. Acquired item and plant at cost 800. It's using this on date. So cost on 1/4/2010, it cost 800. It's used to produce packaged pills. Estimated residual value 50, so 750 to be depreciated. With a straight line depreciation over 5 years is 150 per annum. So we've got 800 to start with. We depreciate it for 2011, brings it down to 650. We depreciate it for 2012, brings it down to 500. And then on 31st March, we're informed by a major customer that they will no longer be buying things from us. Even before it was known, we have been having difficulty finding work for the plant, and we now estimate the net cash flows earned from the plant for the next 3 years will be. So that's the carrying value, and we can have a little table. The lower of carrying value and recoverable amount, which is the higher of value in use and net selling price. Well, we know that carrying value is 500. We now need to know whether we should be impairing this asset. Just below the table of figures, it says the plant is still expected to be sold for estimated realizable value, and there's no market in which to sell the plant today. Net selling price is 0. So we've got to calculate value in use and then compare. This is going to be value in use up here, and compare this with the 500 to see whether we're due to impair. The end of year 1, so I've got cash flows of 220 times 0.91, 180 times 0.83, and 170 times 0.75, plus, added onto the 170, the residual value of 50, which we're still anticipating to sell. So 220 times 91 is 200.2, 180 times 83, 180 times 83 is 149.4, 220 times 0.75 is 165, 514.6 is the value in use, 514.6. The recoverable amount is therefore 514.6. That's compared with the 500, and the lower of is the value that the asset should be stated at. So therefore conclude no impairment necessary. That's a bit naughty at Steve Scott. You'd have thought if he's giving you an impairment exercise, you'd have expected it to be impaired. I think what you might do, and if you're not happy about this figure, what you might do is put a little asterisk there and say, if this calculation had resulted in an amount less than 500, brackets the carrying value, the asset would have been impaired. Down to this lower amount. Just in case, if you think you've possibly made a mistake there, then you can cover your bases by explaining that if it had been, then it would have been impaired, and if you've still got time, and depreciated based on this lower figure. Maybe Oh crikey, how much more do I want to write? Maybe over a revised estimated useful life. Enough of that. I want to move on to tilde. So question 4b2. We own 100% subsidiary. It's treated as a cash generating unit. There's an industrial accident, gas explosion, damage to some. He's asked this question before, twice actually. So we can have a look at those. Resulting accident, recoverable amount of tilde is 6.7. Explosion destroyed an item of plant that had a carrying value, a carrying amount of 500. There's an open offer for the patent. The receivables and cash are already stated at fair values less cost to sell, so NRV, and we never reduce an asset below. Calculate the carrying amount of the assets 1 and 2 average applying any impairment losses. Calculation should be, so we've done 1, we've done that part B1 for 4 marks, part B2. Okay, we've got the goodwill, the patent, the building, the plant, and the receivables. Per question, 18, 12, 4, 3, 5, and 15, 5, 9, 10, 11, 12. Then we're going to impair. If any asset is specifically individually impaired, then we need to impair that specific asset in full. We have this 500 lot of plant, don't we, which has been destroyed, and so we have a revised figures, revised amounts. It's been completely destroyed. So now we're left with 18, 12, 4, and only 3,000's worth of plant, and 1,500 receivables and cash. And now we're told that the recoverable amount as the result of the accident, this comes out at 11,005. So we impair again to carry forward the impaired figures, and the impaired figures are going to be 6.7. Well, they might not be 6.7, it depends. We should not be reducing down to below recoverable amount. But 6.7 is where I'm aiming for. Okay, we've had an open offer, so down at the bottom of the page there, an open offer from a competitor of $1 million. This patent, you never reduce it below its recoverable amount, and we're told that we have an offer of 1,000. So I'm going to impair the patent by 200. Actually, I should be impairing I've got a fall here of 4,800. That should be my first thing, to write it off the goodwill. That means I've got 3,000 still to impair. And then the patent itself comes down by 200. The receivables are already stated at NRV, so they're not going to be impaired. So I've got 2,000 impairment. I need to impair in total 4,008. 2,000 is already accounted for. So I'm looking now to impair a further 2.8, and this is done on a proportional basis. I can't write proportional at the bottom of this page. Proportional basis. I need to allocate this 2.8 over the assets, the remaining assets, the building and the plant, therefore. 2.8, oh look at that, 2.8 does divide by 7, so 4/7 is going to go to building and 3/7 is going to go to plant. So that's 1,600 going to go to the building, and 3/7 is 1,200. That means that comes down to, excuse me, 2,4, that comes down to 1,8. Just add it up, 3, 4, 5, 5, 9, 6, 7, yeah. That will give me the calculations. And that 1624, I've still got 13 minutes left here. I could actually rewrite part A within this 13 minutes, but there's no need. Calculations to the nearest 1,000. What he's actually given us the figures to work on here is given us that if we had worked on it accurately, well, there's no point in actually doing this. that would be 200 exactly. And that would be 148.76. And that would be 165.29 for 514. There's so little in difference in it. But just say what's in nearest thousand, and actually, because he's given us those figures, oh, I don't know, is that, yeah, he's saying you ignore that, isn't he? He's saying ignore that 0.6. But it doesn't matter anyway, because we weren't going to impair it. And that's all in thousands anyway. Okay, enough of that, enough of question 4. I'm going to stop it and then I'll come back on question 5.